Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correa, and happy Mother's Day to all. And let's get right to the technicals of the dollar and how we're going to make mom rich.
That's exactly right. Happy Mother's Day to all the moms. Remember, without you, we simply would not be here today. So thank you so much for all that you do. And welcome back to another edition of The Real Money Show. Yeah, the week that was, we're just seeing a lot of U.S. dollar movements on the top side now. We're seeing a lot of debt ceiling drama, Jeremy, so that's propping up the U.S. dollar this week. Analysts said that the greenback, the U.S. dollar index, may be benefiting as central bank talks and drama is just progressing and the markets are rethinking the narrative. And we're hearing a lot about potential default in the U.S. That's huge. The Congressional Budget Office warned that if they don't come to this quote unquote deal and raise that roof, then they'll default. And then we have more Fed hot air coming from one of the governors who said that because of this, the inflation data that came out earlier in the week, that indicated that, we're seeing prices remaining flat. It's still around the 5.5 region, and that, Fed swaps right now are still pointing at rate cuts by July. So this is we don't know. This is all uncertainty. But really short term, we're seeing the U.S. dollar jump as a result. Gold and silver on the back foot, playing a little bit defense this week, and we saw a little bit of volatility in metals, but more of the same. A lot of hot air from the Fed and a lot of drama coming down the pipe with debt ceiling issues.
Yeah, so gold was down about $40, still hanging around at the 2,000 level, a little bit above that, and silver came down about $2. We were trading up around 26, pulling back to around 24, which I think is where we were maybe just over a month ago. So they've pulled back. They're holding in pretty strong at these levels, though. Could you see any scenario in which there's a major pullback on gold and silver at this moment from just understanding some of these technicals with the dollar index moving? I mean, I saw something recently saying that I think it was a very large gold miner basically putting cost of production around $1,700 on gold. I would think that's a pretty strong floor. Mm-hmm. If the market were to come off. I mean, where does it come off to? If we were looking at a big pullback, and I'm not sure the market has weak hands at this point. Do you see weak hands in the gold and silver market?
Not so much. We look at we're going to get into that later, the gold demand trends that came out from the World Gold Council. Demand is definitely up. We're just seeing outflows out of the ETFs, rightfully so. You don't want to be the ETFs. You want the actual physical asset to safeguard from all the uncertainty. Now, I wanted a little bit more robust data as to why we saw the pullback, primarily just in silver this week. And a lot of newer investors wanted to know what's going on with the silver market. Because it's such a small market, above ground ounces compared to the gold market, being the number one market cap globally, you do have a little bit of priciness and choppiness. And we have to remember as well, silver has dual attributes. It's a precious metal, so that the precious word connotates that it's money, so you have currency attributes, but you also have the commodity aspect that they're being demanded in industries. This week, so head of commodity strategy out of Saxo Bank, Ole Hansen, famed strategist. He's the chief strategist there, and he talked about the price action and what was going on with silver, and it had to do with copper. Copper broke below a key support for the first time in 4 months, with China's weak demand recovery supporting fresh selling by momentum-based funds, forcing reduction from long-term focused bulls. The weakness has spread into silver, while gold has only seen a little bit of profit taking, followed by the latest U.S. inflation print. So this suggests that, yes, because of the fears of recession, you have that algorithm play of selling off the copper, and as a result pulls the industrial side of silver down as well. But gold stays firm because, as we know, central banks are holding gold because it's money, and gold is staying firm, still above 2,000. So the strategist points out that we're looking at as well the silver to gold ratio has rallied from about 78.50 up to 81. So we're still within range, and a technical perspective downside break would be around 23.75, which we hit. So we're found very good, strong support. So silver could be oversold, Gold jumped to a resistance earlier, a couple weeks ago, 2050, 2075, actually, an all-time high area. But again, it's this notion of the market's view, seeing a Fed pause, and now fueled by further rate cut bets. Fed swaps are betting that they're going to cut. Very bearish for dollar. The dollar index was hovering at 101, and today it's at 102.60. So we've found a little bit of reprieve, a little bit of breather. Maybe for the next couple weeks we could see a little bit of consolidation in metals, but overall, medium to longer term, betting on high precious metals prices for sure.
The number 18778 silver, the website guildhallwealth.com. So essentially, it sounds like we're going through a little bit of choppiness. There'll be a little bit of turbulence here, but there's no nosedive associated with this gold and silver plane right now.
There's no defaulting in precious metals, and this is the entire point. You're going to nosedive with a bank. You're going to nosedive with your currency. You're going to nosedive with a stock that's overvalued. You can nosedive within any asset class right now besides precious metals. We have professionals that came on the microphone this week in conferences that talked about the issues, these fundamental outliers that only support gold and silver ownership, and that is the key.
Yeah, we'll talk about that a little later in the show. Let's stay on topic with this technicals in the U.S. dollar. And this correlation between this relationship between gold and silver and this fiat currency. And let's talk a little bit about the misunderstanding between the two. There are people who think that the dollar is a real thing.
They do. I mean, what is it? What backs the dollar, Jeremy? It's not a dollar. It's the Federal Reserve note, so we have to redefine it for what it is. It's a fiat currency. It's unbacked, and it's the fiat word means it's Latin that let it be so. It is a dollar. It's $50 because I said so.
Which is interesting that it is a dollar by decree, and yet the cash that we have, there are stores out there that will not accept the cash that is decreed by the government.
No soup for you.
It's government money, and a store won't accept it because they're like, sorry, it's not digital.
Yeah.
It's like, I'm noticing this idea that the lies are circling around to the truth. Do you know what I'm talking about? It's like it's become, the ironies are stacking upon each other that they've circled back around to the truth. You now have stores no longer accepting a fiat decreed money by the government, but they don't even realize that they're not accepting it. Mm-hmm. They're like, no, we'll just take the digital version of it. Mm-hmm. It's curious because if you had $100,000 in the bank, could you take that out in cash? No. So what is it that you have in the bank? Mm-hmm. What is it? What is it? Where does it derive its value from? It's perplexing. Well, it's based on the US dollar, you see, which has a strong index right now. Didn't you know? Mm-hmm. But what's that based on?
Well, is it the pound?
Well, I don't know. What is it?
Franc?
What does give that value exactly? Well, I don't know. We use it. That's what gives it value. That's what some would say. What would you say to someone who said, well, it has value because we use it?
I heard from someone today who said it's just a medium of exchange. It's a commodity. I use it for the purpose of transferring into something of value. And that's what we're using it for. It's not a store of value. It's something that we can use to obtain something. And therefore, because it's not backed by anything tangible anymore, we have to be very wary of holding it long term because of the fact that the entities that we get our currency from has been just issuing, and there's no debt ceiling. They have been issuing currency despite this debt ceiling talk about quantitative easing and ending quantitative easing. They have been continually pumping money to countries around the world, billions here, a couple billions for you here. The printing continues, so that the strength or the trust and the value underlying the currency is totally gone, and it's missing the fundamental core of what the currency should be. It should have always been, according to the Constitution, backed and pegged. And I know this is where we're headed back around the world. We're seeing this with all of the BRIC nations geopolitically looking now. All the countries are looking towards gold and silver. Even the states going back to a gold standard looks like we're going to be heating up in that conversation as well.
Yeah, I definitely want to bring that up in just a moment. But, if you're looking at understanding value, if you're basing it on something that has no relationship to anything else, no anchor, then you have no ability to understand where you are. So in that scenario, inflation becomes a phenomenon, just something that happens. Asset prices go up. Well, how do they go up? Well, you've created the money out of thin air. And so therefore you have more money chasing the same amount of goods, and the price of those goods goes higher. But people luckily people can see it now because the jig is up. They've printed more money they can no longer cloak it. When inflation was at 2%, they could cloak it. When it was at 5%, they could cloak it. They could hide it. They could obfuscate the inflation, the actual devaluing of the currency. Now they can't. Now everyone says it's 15%. Everything I pay for is 15% more. It's no longer masked.
Mm-hmm. But the narrative continues. Like we're seeing, we're going to 3-4% is what Tiff Macklem said a couple weeks ago. He says we're going to go down to 3% by the end of summer inflation. Where does he see this price go down? Where the price? The narrative will continue. It's driving people nuts, and it's driving people towards reality.
Yeah, if you don't have it anchored to anything, you don't know what the value is. And if you don't know what the value is, good luck knowing when it's being stolen from you.
That's true.
And now we can see it's being stolen from us, and that's why. How do you stop that? You have something that's nailed down, something that cannot be destroyed by inflation. That is physical gold and physical silver. It is super simple. And the number 1-877-8-SILVER, the website guildhallwealth.com. Much more to come on The Real Money Show on AM 640. Welcome back to The Real Money Show. The number 1-877-8-SILVER, the website guildhallwealth.com. We're talking physical gold, physical silver, which, by the way, have done incredibly well over the last couple decades. Completely outperforming many investments. They're both up near 400%, which is exactly what you're looking for. When we're not advisors. Number one, we're not advisors. But when you look at the financial landscape, you say, well, going back to our previous discussion of understanding value, you say, well, what I first have to do is beat inflation, right? I have to beat inflation. Now, I have to really know what inflation is. Now, if the government says it was 2%, but all of my costs and everything that I'm seeing are rising at a higher point, then there's real world inflation and there's the government gagabaloo, okay? I have to beat the real world stuff because that's the world I live in. That's the world you live in, right, Jerry? Mm-hmm. Okay, so if we can beat that, then great. We've retained everyone say it together, purchasing power. That's what we need to do. You work really hard for your money. Right? You don't work hard to just give it away.
Or you're retired.
Right? You work hard so that you can maintain it. So you have to retain your purchasing power. By all rights that we've seen, looking at the last couple decades plus, gold has done that. Now someone could say, oh, but it goes up and down. It's gone up and down. It's crashed at points. You know what? You know what I see go up and down all the time too? The dollar. Up and down. Every day. Mm-hmm. There was a point where the exchange between the US and the Canadian dollar was at par. There was a point in the last 15, 20 years where it was at 145, 147. And there's a time now where it's at like 133. So don't tell me that gold is volatile when the dollar is just as volatile. Now, you can't print gold. It takes blood, sweat, and tears, but it does store once you've created it. Because once you've pulled that out of the ground and refined it, that's it. Very low cost. You want to transform it into something else? Heat up a pot, okay? It does not take up a lot to now transform it into something else. Not a lot of energy. Even cash you have to replace. There's a cost there. digital stuff, you got to turn on the lights. You got to keeping that energy flow going to keep those currencies going, right? To keep that digital money going. So I think that with gold and silver, they protect wealth in the sense that all very easily overcome the printing of the money of the currencies and the devaluing of the currencies causing inflation. And gold and silver have done that. So to me, the reason I bring it up, Jerry, is to me, I see a lot of people moving into the metals, even with other anxieties that they may have about finances, et cetera, is they're looking for the peace of mind of how do I protect against that type of inflation? See, when it was hidden, they didn't know we all didn't know what was going on. But now you see it and you say, I need to protect against that creature. That's showing its ugly head. I need to defend against that. And that's where people are buying gold and silver to protect against that. What else are you seeing why people are getting involved in the precious metal market? For me, I'm seeing people wanting the peace of mind. I got to beat that inflation, and they're doing it.
Yeah, it's people who have witnessed history. History is just in this regard, regarding money printing and monetary policy. History tends to repeat itself. A lot of my clients over the past 3 months have come from Eastern European descent who have left communist regimes to come to Canada to build a life. And unfortunately, it's gone a total 180. They've saw the money printing there that we have experienced over the last 2 years here. In 2020, Canada printed 4 times the size of our GDP in their currency. The loonie, a small country with 35 million people, fraction of which is the engine of our GDP. And then now we have the miscalculation and the redefining of our inflation. And yes, prices have gone up and tripled in certain items, but yet we're being told, don't calm down, it's just 3%. No, people are not having it anymore. So it's people who are, they're second guessing the professionals. They're taking their money for themselves that they worked blood, sweat, and tears for that currency. So instead of parking their hard-earned wealth in a crypto or cash or even a GIC that does not offer, anything to match the real-world inflation, which is around in the teens. It could be around 13 to 15%, according to John Williams Shadow Stats. It's approximately 14 to 15% right now. And because you've redefined things, Social Security is not paying this. The pensions it's not keeping up, and who knows? People are worried about retirement as well. Do I have to return to work? So these are real world problems. Real people sharing their problem that they're not getting the answers that they used to get from planners and consultants. They're turning and they're looking at the historic value of precious metals, intrinsic value of what it has done for thousands of years.
The number 18778 silver, the website guildhallwealth.com. One of the other things that I'm noticing as well, a phrase that's being repeated a lot is that, and again, we're not advisors. Moving into physical gold and physical silver is moving away from the investing sphere, and it's basically just saying, I'm going to hold real money. That's it. It's very simple. I'm just going to hold real money. I'm not taking investing. I'm not, I don't have to understand companies and all of this stuff. But people say, my advisor doesn't get it, doesn't see what's happening right now. What does that mean? It means can't admit or see the woke agendas and how it's playing out. Things like, let's say, for instance, Disney, right? Woke programming. You don't like it, you unsubscribe. And look at their stock. Look at their stock. It is a perfect example of go woke, go broke. And I think that a lot of people are talking with their advisors, people who help them with their finances, and those people are not seeing it. They're following along with the ESG agendas. We did a show about the ESG agendas and understanding where it's coming from, the background of where it's coming from. It doesn't come out of nowhere. It's not just something that just appears. There's money backing that. There's specific players backing that. And if you don't follow along with it, it's like having a gun to your head as a corporation.
Right.
Maybe Disney doesn't want to go that way, but they're being forced to go that way.
You pointed that out before.
Like Anheuser-Busch. Now they can go ahead and make the press release and say, well, it's because of this, this, and this. No, it's not. You guys are following the agenda, and you can protect the gangsters that forced you to follow that agenda, but people aren't buying it. They don't want to buy it, and they'll unsubscribe. Now, what happens when your financial institution goes the same way? You don't have to participate in that either.
That's what's happening.
So you can pull your cash out of that too, and you can go into physical gold and silver, which are incredibly safe. Why are gold and silver incredibly safe in that respect?
Well, it is considered safe, and there is zero counterparty risk. It is deemed tier 1 capital according to, now we have our regional banks and our banks, central banks, and the bank above all the banks is the Bank of International Settlements. And they have determined that gold is tier 1 capital because it offers zero risk. There's no risk. It's a risk-free asset. It's money. And this is the reason why countries are moving towards gold. You need that counterparty risk, and historically, central banks, countries have owned physical. This is what's so special about gold and silver being wealth insurance, is that it offers two things, and this is what these central banks need. They require a reserve because it offers, number one, right, liquidity. How quickly can I, if I need to sell, if something came up, Jeremy, if I need to sell, how quickly can I sell?
Yeah.
Right.
Yeah.
A lot of our high net worth clients can care less about the fundamentals here on our desk, about supply and demand and They're wealthy. They get it. They just want to know, hey, something came up, I need to sell. You can sell immediately. Immediate liquidity. Number two, you need decoupling of your wealth from the conventional arrangements. These are financial assets, financial institutions, regional bank issues, currency issues. It's got to be decoupled. But it's an asset that is a monetary asset. So it does not involve the financial systems, the conventional, but it is your monetary asset. It's money. So when you're looking for safety amongst and something that will insulate you, from all of the noise and all of the risks and what's going to happen at, debt ceiling, this and that. This is what's going to insulate you, and that's what's so special about gold and silver being your wealth insurance. Yeah,
and they can't drop to zero. That's part of the lack of risk in it as well. It's not an investment; it's money. And it doesn't pay a yield because it's not an investment. It's not supposed to pay you a yield. It's just physical money. That's it. Super, super simple. Now, more every day, every week, there are more and more people talking about it. Professionals talking about it, and we've had a few professionals, big money professionals, talking about getting involved in the gold market and what they're seeing happening in the gold market today. Jerry, can you share a couple of tidbits with us on that one? Golden tidbits.
Yeah, definitely. So
I want to see that at
depending on
Tim
who
Hortons.
you ask.
I want to see a golden tidbit.
Depending on who you ask, the U.S. economy, our economy here is either headed for, they're talking a soft landing or a post-recession or a total economic downturn, like an apocalyptic downturn.
I'm not kidding. I want a golden tidbit. I want, like they had the Maple Leaf one, I want a golden tidbit.
Timbit?
Timbit. That's what I meant. Tidbit. Timbit. You know what I meant?
I'm down for that.
I want to go in and show my son. I'm like, you want the gold one, right?
Sponsored by
You don't want the
Guildhall.
silver one. That one looks grayish. You want the gold one.
That's so true. We have to have critics these days about
Gold
monetary
balls. That's what they'd be. They'd be right there. You'd go in. Gold and silver balls.
I would like those, actually.
I would. I'd get 10.
It's what we have.
Give me a box of 10.
Yeah.
5 each.
That's right. So this week, Jeremy, Duquesne Capital founder Stan Druckenmiller, one of the most famous and most profitable traders of all time, hands down. Obviously, he did some trading with Soros back in the day, but anyways, moving forward, he's successful nonetheless. He's a major critic of monetary policy, major critic of who he calls the supervillain Jerome Powell. And he came on to say, and he was really surprised about how things were playing out regarding the Fed, and how the Fed continued to have their foot on the pedal, despite the $5 trillion that was released in 2020 to fight COVID. He says, while it financed 60% of that amount, was bound to have dire consequences on the economy. And he's sitting here, he says, I'm sitting here staring in the face of the biggest and most probable and probably the broadest asset bubble of all time. Forget that. Forget that I've ever seen, but that I've ever studied in my history. Given that preponderance of evidence mixed with the fact that Druckenmiller says there have historically only been a few instances of soft landing in the U.S. economy following a recession, this investor sees pain ahead for the U.S. economy. So he comes at a time where the Federal Reserve is trapped. They want to keep this inflationary fight in the narrative, like they rolled out a Fed speaker today who says we have to keep raising interest rates because inflation is not, the fight on inflation is not over yet. So it really helps the U.S. dollar out, but they're trapped because the U.S. Federal Reserve has been losing money. They passed into the abyss. The cost to service that interest is squeezing them dry. And we're talking about default. This is Federal Reserve talk now. So the huge criticism coming from famed investor saying that Jerome Powell is making the biggest mistake in the history of the Federal Reserve. And this is coming to a crux, Jeremy, and we're heading into something very, very interesting to follow, and very interesting because we are seated and we're positioned in precious metals.
Absolutely. We're going to talk about some others who are looking for big, big things in the gold and silver market. So stick with us. The number 18778-SILVER, the website, guildhallwealth.com. This is a Real Money Show on AM 640. We'll be right back. Welcome back to the Real Money Show, the number 18778-SILVER, the website, guildhallwealth.com. And we're just talking in the last segment about large hedge funds and such that are positive to gold and see good things about gold. Jerry, there's one other hedge fund looking at gold as well. Can you tell us a little bit about that?
Well, company, yeah. We have Bridgewater's co-CIO who spoke this week at the SON conference. So Bridgewater, obviously founded by Ray Dalio. The headline goes from Yahoo Finance, de-dollarization means gold is underrated and has a long way to run, says Bridgewater's co-CIO. Her name is Karen Cornell-Tambour. She said it's underrated, could be pushed up by the de-dollarization trend with the BRIC nations, Brazil, Russia, India, China, on the forefront. That the geopolitical turmoil is simply not going away. It's going to continue. This is a slow-moving secular support for gold. And inflation is not going away. We'll also keep interest in gold as well elevated, that the inflation is sticky. It's a reality, even though the planners and our government saying inflation is going away. We have professionals here that know inflation is here to stay. And she says that gold could be at the start of a long-lasting growth period as global de-dollarization trends continue. And gold has historically been attractive when interest rates are falling, as the Fed swap rates point that interest rate cuts are coming. And now she thinks now it's time for the precious metals, and she's setting up for a long-term bullish outlook, and that gold ultimately is underrated, Jeremy. And why are they pivoting? Why are countries pivoting it away from the dollar? And this comes ultimately because, we've had countries being punished for using and holding U.S. dollars and transacting. Were pretty much punished, from the Russian aggression towards Ukraine and their start of the operation there. They were punished. And as a result, other countries saw that this was not the right move to make, and we have to pivot. So they're pivoting towards a new foundation. A financial reset has occurred. And it's going to progress. So it's very exciting to watch and to note that these things on gold, very exciting and a lot of truth here.
Yeah, so we've got hard landing. We've got geopolitical issues with regards to de-dollarization. You're right. It does go to the way the U.S. sort of punished Russia, but that goes back even further in some ways to Venezuela when the Bank of England or the London vaults they said, no, we're not releasing your gold to you. Mm-hmm. So this kind of was part of that kick back then. There was a period of time, for those who've been following the show, there was a period of time where we were tracking all of the countries that were taking delivery of their gold back. Yeah. Right? So over the last year or two, it's been happening since 2008. But over the last year or two, we've really focused in on the fact that central banks have been buying a lot of gold. But let's just remember that there was a time where all of these central banks were taking delivery of their gold. They were saying, no, I don't think I'm going to store it anymore in New York. I think we'll take delivery. That was Germany, and then there was a whole swath of countries saying, yeah, I'm going to take delivery. We're going to store it here.
Yeah.
Right. Kind of like a client saying, I'm going to store it at home. Like, yeah, okay, of course. Like you want to spread it around. So there was a lot of that kind of bringing it back.
It wasn't a bank run; it was a vault run.
Yeah,
they wanted their gold back.
But yeah, this geopolitical idea of the de-dollarization, because if you're a country that looks the wrong way at the U.S., you might be punished for it. So they're looking for alternatives. So far, it looks like the BRICS are enjoying all of the deals that they're making as well, where they all just seem so fast and fancy free, where they're just like, what currency do you want to trade in? Yeah, trade in your currency. Totally fine. We're good with that. Everyone's just making nice. And eventually they'll have to codify it more and say, okay, how are we going to do this? What's the currency going to be? I think they'll be forced to kind of, like countries like Canada will be forced to pull along with that. I think that's the wind of change, perhaps.
Yeah, and it's reminding me of the passage of the bill here in North America pertaining to the U.S. We had a congressman introducing a sound money bill that would enable the Federal Reserve note to actually be $1 again, to regain stable footing for the first time in more than half a century. You have Mooney out of West Virginia tabling, introducing Bill HR 2435. So we're seeing this here in North America, here at home as well, just south of the border, that the U.S. Federal Reserve and the U.S. Treasury are given 24 months to publicly disclose all their gold holdings, after which time the Federal Reserve note dollar would be formally repegged to a fixed weight of gold at its then market price. So we're seeing a change happening at the grassroots level, at the governor level, at the states level, and that we really need to focus upon. And yeah, because we are on the outside looking in now, Jeremy. We have, us Canadians fearful of a central bank digital currency idea. No, the BRIC nations have set the foundation for trading multipolar currencies, multipolar idea, along with gold, and bringing that and pegging your currency to gold, pegging your silver, pegging your money to potentially silver. And this bill actually has been tabled, but nothing. We know that bills don't just pass; they don't just become law until something breaks, Jeremy. So something's going to have to break in the market, and then they'll introduce this eventually.
It's a huge bill. This goes along with the idea that most states have dropped the taxes on physical gold and silver. There's been a huge move towards remonetizing physical gold and silver. And what you have here is sort of two-tier structure in a way, or two-tier kind of coming at it in two ways with physical gold. One, you've got entities, people, businesses, families, sovereigns saying, I want to own gold because I want protection. I want to have zero counterparty risk. These are very risky times, and I want to be out of that. So they're going to gold for safety. Then you have this other side of things where they're saying, but we're going to need a financial system because this one's breaking down. We see the breakdown in terms of this move towards the digital currencies is they're trying to pull us in that direction, saying, look, this system's coming to an end. You're going to need the digital currencies here, okay? We're going to try to guide you over here. The other side are saying, no. We want a different system, and that system is going to have some gold involved in it, maybe a lot involved in it. And so there's a two-tier aspect to this. You've got both gold for protection and then gold as a monetary asset for trade and for the basis and the backing of currencies down the road. Two amazing reasons to be looking at gold. We look at it basically from inflation or money printing or currency printing causing inflation, protect against that. Then you've got the supply demand, which we're going to talk in the next segment, supply and demand. And then you've got the geopolitical, which we were just talking about here. Lots of good reasons to be thinking about having this as part of your wealth holdings. The number 18778-SILVER, the website guildhallwealth.com. You wouldn't believe it, but there actually is so much more to come here on The Real Money Show on AM 640. Welcome back to The Real Money Show. The number 18778-SILVER, the website guildhallwealth.com. With Guildhall Wealth, you can acquire your physical gold, physical silver directly. And you can do that by going to our website, guildhallpreciousmetals.com. You can give us a call at the office, 18778-SILVER. And, or you can call and make an appointment, or email us and make an appointment. And, again, purchase your precious metals, take delivery, start building a position today. Another thing that you can do is if you're looking to protect more wealth, if you're building up to, okay, I would really want to protect some wealth, we could look at the depository. And what that does is it secures the product, fully allocated, fully segregated, liquid, easily buy and sell on a phone call. You want to go on vacation, market's making some moves, you want to trade on that, give us a call. You decide on a whim that you love this property you've just visited in somewhere around the world, and you go, I need money, give us a call. Your product is liquid. Then finally, when we're looking at retirement accounts or registered accounts, this is the best way. Gold, silver, long-term, they've completely beaten inflation. They are the best way to preserve wealth, and there's no better way than doing it within a registered account. And again, within the registered account, clients own their physical product directly. There's no counterparty risk. It's not digitized in any way. There was a story that came out this week, Jerry. They were talking about in China, they're making it easy for people to buy and sell gold using their checking account. But they don't own it. It's done by grams. And when I hear grams, because no one's allocating grams with serial numbers,
True.
I think, oh, okay, that's a 1-to-1 holding. But like anything, there's a counterparty. And in this case, the bank would be the counterparty. If you don't hold it, you don't own it.
Mm-hmm. That's right. And that's
convenience. Convenience be damned. Mm-hmm. If you can't hold it, you don't own it. Now, at the RSPs, you can go to the vault and personally hold it in your hand. You can't do that with a gold-backed fund. You can't do that with an ETF. You can't do that with a certificate. Mm-hmm. Try. If you're listening to this show and you have one of those investment vehicles, because that's what they are, investment vehicles.
That's right.
Go try it. Mm-hmm. But with Guildhall, you own your product. You can go to that vault, set up an appointment. You'll pick up that product in your hand.
And what some people are doing with their RSPs, they're a few years away from RIF age would be the age 71. 5 years, let's say, away from age 71, where your RSP, you get rewarded, you get your RIF income payments, you get your monthly or your quarterly or annual payment. You're well done. Here's your money back. You want it in your checkings or savings account. Well, a lot of Canadians are worried about what does the loonie look like in 5 years. And I have a $100,000 RIF, $200,000 RIF. You're getting cash back in 5 years? Well, if you bought gold in your RSP now and it converts into a RIF, well, guess what? Those gold bars are yours. You want to take home some of those gold bars? Let's take home bar number 1, 2, 3, 4, 5, 6. That serial number. Call that home. Those are your gold bars sitting at the vault outside of the financial digital system. This is the point of Guildhall's. This is why we stand by this, because you have moves to be made in the future. You have moves, and these gold bars are yours, which you can take home, hand them off. This is the way to protect against the purchasing power loss that we're witnessing with the loonie, and this is the best way to pivot for your RSPs.
Now let's move a little bit towards the digital central bank digital currencies. It's really wild to follow the central bank digital currency train. Here in Canada, they're talking about it again. I just literally saw an article this morning that the Bank of Canada wants to hear what you think, but they want to give you a rigged survey to tell you how you think about it. So it's basically going to guide you to say, yeah, we want it.
Did you take it?
No, I haven't looked at it, but I remember, a couple, what was it in 2020 about like kids going back to school and stuff. You'd get these surveys from the Ontario school board or whatever, and you'd read these things, and you say, this survey does not actually give you any line of what my thinking is. It's completely guided. It's like a mouse through a maze. You're like, no, you're not actually, they won't even allow you to provide a comment in the end. So I haven't looked at it, but I read all the comments about the people who did look at it, and they were all pretty peeved that it was like, this is already a trumped up, misguided, they're never going to let people get their own opinion on it. And yet, it's the silent majority, right? You see this, I'd love to kind of get your updates on here, this pendulum swing between all of these states that are saying, nope, we're going to make it law. You cannot have a central bank digital currency. And then it's like, even with these central bank digital currencies, you're not supposed to be dealing directly with the central bank. And the idea of all the controls they're going to have over you. But it just seems like it's just a psyop to scare the crap out of you.
That's right. Ultimately, that's what it comes down to. As we saw the report out of Rebel News today, a report from the Royal Canadian Mint came out this week, and the headline reads, Canada's failed digital currency venture cost millions of dollars, says this report. And this is according to figures released by the Royal Canadian Mint. A failed Canadian digital currency venture cost millions of dollars. Jeremy, this sounds very much like the ArriveCan app that cost millions of dollars in Canadian taxpayers' money. Where did that go? They scared people half to death, rushed and get their passports. You got to do this and that to get out of the country and return. And the same thing happens with the central bank digital currency. You're going to be controlled. The currency will expire, scaring everyone half to death. But truth be told, the headline reads, it's a failed currency venture. And this is not something that I'm concerned about anymore. Time will tell. This is a litmus test. Let's see how long this lasts for. How long will this narrative last for? And the survey, I mean, KYC, know your citizen. The citizens don't want to answer these bum questions. And it's just like people leaving their financial planners or their banks. Know your client. Your clients have real concerns, real world concerns that are much different than that was 10 years ago or 15 years ago. The KYC needs to be redefined and understand and know your client, who's your client today, because they have changed. And they have changed, and they're looking for the ownership of their money.
And people have agency. They can do something about it. They can vote with their wallets. They can take their currency and put it into an actual money, physical gold, physical silver, real wealth. And this is a great way to protect yourself and look at where it's going to go in the future. It's an amazing time to be involved in this market. Give us a call. The number 1-877-8-SILVER, the website, guildhallwealth.com. Jerry, thank you so much. Great chat today. Thank you to everyone listening today, and we can't wait to speak to you next week. And we just want to say one more time, Happy Mother's Day to everyone. It's been The Real Money Show on AM 640.